Hello, Mike Swanson of WallStreetWindow.com here. Today, as we hit the final closing bell, I want to give an update on the stock market. There's a couple interesting charts I want to show you. Today, we actually saw a critical sector in the stock market completely break down. It was one of the leading sectors in December. I actually bought stocks inside of it several months ago, but that sector has fallen very hard over the past couple of weeks. I don't know if it's going to be talked about on CNBC, but it's down now year to date. At the same time, money has shifted into a new sector that's just surging and has reached a critical breakout point. And I'm also going to show you a real live trade that I have on right now. And I got a presentation prepared for you. Now, I don't know if the market, I hit the button to start this show right as we hit the final bell. It looked as if the Dow would be down about 20 points, but was up a point or two when I last looked. There was a small bounce going into the close. But I wasn't clear what the S&P 500 was going to do. A lot of people worry, is the stock market going to be up or down by the end of the day? But in reality, there's ways. I'm really not concerned about that myself. And I got some trading setups that are working no matter really what the averages are doing. And that's what this video is going to really be about. So let's get right to it. I just want to make sure I got this loaded up. So again, today's the 7th, and let's get right to it. Now, interesting enough, is I looked about 3:45 going into the close. This was the status of a couple things I'm watching. The S&P 500 is up 10% year to date. However, the 20-year Treasury bond is also up 8.3%. Not that much of a difference. And the Treasury bonds are safe haven. So when you see that, there's two implications. One, it really makes no sense to be 100% vested in the stock market. Everyone should be diversified, especially when bonds are going up almost the same amount as the stock market, and they don't pose the same risks as stocks do, generally speaking, especially when you had a bull market going on for 8 years now, and you get higher interest from something like TLT, an ETF for the bonds, than you do from S&P 500. But the TLT goes up when interest rates go down on the long-term bonds, and that's what's been going on this year. And one thing that this has helped fuel is the next statistic here, and that is gold is up 16.7% year to date, beating the performance of the S&P 500, smashing it really by 60%. Now, and I do own gold, of course. I own silver and I own mining stocks. And the GDX ETF, which I have a position in my retirement account, it owns a basket of gold mining stocks. It's up 21.79% year to date. And when you see that, it tells you, one, it makes no sense to be fully invested only in the S&P 500 when bonds are up almost as much as S&P 500 and gold is up more than S&P 500, and gold stocks are up twice as much as S&P 500. Gold bugs are in control of this stock market, and today, gold around 4 o'clock was trading at 1,354. So always be diversified, rebalance your portfolio from time to time. We'll get into the market outlook. Let's first look at the big picture for gold. There's that 1,350 level. This chart, it won't update for today's action for another hour or two. So we got yesterday here. We closed above 1,350. We are at 1,354. And 1,350 is really the key resistance level that's marked the high for gold last year about, I think it went up to 1,375, but roughly speaking, and the same thing happened to other previous times in 2013 and 2014. So we're talking about a 4-year resistance zone, and I interpret what we're seeing this year is the second leg of a bull market. The bear market bottom ended last year, and we're transitioning into the next leg. Confirmation of that is gold stocks are outperforming the metal. They tend to lead the metal. So when the gold stocks lag the performance of gold, that's a sign that we're in some sort of top. It could be temporary. It could be a bull market top, but that's not happening. The gold stocks are going up faster than gold, as you saw. So I like gold, and I got to emphasize that. And, you know, I like gold. I mean, it's just you want to beat the market. You want to be in the stuff going back up more than the market is, or even go up when the market falls. And that takes us to the Dow. What is going on with the Dow? Well, today at 320, we were down 50, but I think we came back a little bit. But regardless, it doesn't matter. We have bounced 3 times now in about 4 weeks, right off the 50-day moving average of the Dow. Now, I'm not going to draw any gigantic conclusions, but the obvious two are 2 things to ponder. Is this a topping pattern that's going to be a prelude to a bigger drop in October? I actually think it is. I think it's a high probability that that is going to actually be the case, and we're going to see the stock market tumble starting by the end of this month or October, and it could start, you know, we can't predict everything. It could even start tomorrow, and I kind of doubt that, but the next support level on the Dow below the 50-day moving average is somewhere between 21,200 and 20,800. That's the zone of the 150 and 200-day moving averages. I have that as the first step of a correction, and we got to see from there. But we haven't had a correction really since the first quarter of 2016, over a year and a half. That's almost 20 months. So, you know, it's just, you know, they happen. So don't be shocked if it does. But forget about that for a second. What's the other possibility is that we're in some sort of consolidation phase happening in the stock market where we're trading in some range to prepare for a breakout, probably into earnings in October. That's what the bulls are saying. I don't think they're correct, but it doesn't matter. That's what they're saying. And the implications of either scenario means that 2 or 3 weeks or month, there really is no immediate upside for most stocks. I emphasize the word most stocks because obviously the gold stocks have been taking off. Gold cleared that long-term resistance level, and the GDX went up again today, with some gold stocks even up 4%. It's an exciting time to be involved in that sector and see that in your account if you're in it. A lot of people watching this are, because, you know, we talked about gold for all year and did last year. I really pounded the table on this coming breakout, and here we are. But really, it's the stock market we need to think about for a moment and look at this indicator. This is really important. This is a sector that has broken down today. It had support around 51, this ETF, KRE, all year since March. Today smashed down almost 3%. Now, what you want to note on this is 2 things. One, this was a leading sector immediately after Trump won. I, in fact, bought about 10 stocks that are in this sector myself that paid big dividends. And I sold them somewhere in March or April. I can't remember exactly, but I did get out of them. And now they're faltering. And they're below, this ETF is below the 200 and 150-day moving average, which is a negative. And it suggests that if there is any correction in the stock market, that this sector will lead the way down. And if there isn't a stock market correction and the Dow were to make a new high, the NASDAQ made a new high, led by some of everyone's favorites. If we turn on Kramer tonight, good chance he's going to be talking about NVIDIA. Good chance he's going to be talking about Amazon. Almost a certainty he'll be talking about Apple, but those stocks have nothing to do with this sector. This is the regional banking sector. And now what happened to the sector is after Trump won, interest rates actually went up. TLT, which I talked about earlier, went down. Long-term rates spiked. And this was seen as something that would be a new trend emerging this year and next year of higher rates. In December last year, the Federal Reserve predicted that interest rates would go up 4 times this year and go up even more next year. Those predictions have all been thrown in the garbage can. They've only raised rates twice. And today in the Wall Street Journal, there's an article that said they probably won't be raising in December. The Fed Fund futures, which are what traders actually trade to predict this, have only a 30% chance of a rate hike in December. That's basically taking off the table. The story in the Wall Street Journal, though, it said that they won't raise rates because of the hurricanes. Let me repeat that. The article in the Wall Street Journal, based on leaks from Fed officials, said the Fed won't raise rates in December because of the hurricanes. Their argument is that when hurricanes hit like this, and we got 2 of them hit the United States, if you're in these areas, get out if you're in Florida, or make sure you're safe, and pray for the people of Houston, goodness gracious. But the deal is that what these Fed people were saying was that when the hurricanes hit, and we got 2, it's going to cause economic growth to drop. They predicted 1 to 1.5% of GDP growth is going to be shaved off the third quarter. People are leaving these areas. It disrupts people's lives, causes damage, and really just grinds the economy to a halt while it's going on. But then, of course, there's the rebuilding, right? And they say, well, the rebuilding is going to come in the fourth quarter, but we have no way to predict how much that will add to GDP, if anything. So they claim they're going to wait to January in this article to see what is going to happen to the economy because of these hurricanes. And the important thing when it comes to the regional banks, let me turn this off so I can talk to you, and I'll load this back up in a second. But what is so important about that is with regional banks and local banks, their profits come from higher interest rates. So if the Fed is now downgrading its outlook on interest rates, that's hurting regional banks. It's hurting local banks. It's hurting their profit outlooks. And back in December, when it seemed like rates were going to go up 4 times this year and more next year, that's why those stocks just shot up, because it was like, man, Trump won, tax cuts coming, infrastructure coming, people are feeling good, interest rates going up, and bank stocks went up. If you can remember, the Dow smashed through 20,000. That move last December, the big leading Dow stocks that really helped drive the move during that month was Goldman Sachs. It went up like crazy, crazy, but it had like, 20% of that Dow move, a huge percentage. And now it's all kind of gone. And that's a big component of the S&P 500, these bank stocks. So if they are going to falter in that KRE ETF is broken down, and if the XLF breaks down and Goldman Sachs breaks down and JP Morgan breaking supports, that's gonna weaken the stock market. And at some point, it doesn't mean the market's going to crash based on this, but it's something we got to be aware of. Maybe Apple still goes up, maybe Amazon still goes up, but for the time being, we're in a situation where, at the best case, the Dow will hold the 50-day moving average. It won't fall. It won't tip into a correction, and it's going to consolidate with these money shifts in these sectors of gold leading and banks sinking and so forth. That's the bull case for the stock market. But that means that for the time being, upside is limited. And that just means don't go on wild gambles. Don't start buying calls, trying to gamble instant stock market gains that are unlikely to come. If you want to invest in the right sector that's positioned now to really go up, look at gold, look at silver, and so forth. Now, let me show you the next thing that we got, and that's to punctuate this even more, is many stocks are lagging the market averages. What you're looking at right here is a very important indicator. It's the number of stocks inside the stock market above their 200-day moving average and below it. So, of course, the averages are above that, right? The S&P 500 is above the 200-day moving average, the Dow and the NASDAQ are too. But the number of stocks above those moving averages has slowly been declining since February. And you can see it fell from 70% to just at 55% in August when the Dow last made its peak. That's a sign of internal weakening inside the stock market. At the end of August, of course, there was a rally. The NASDAQ bounced back up, made a new high briefly one day, but this indicator didn't go up at all, barely. That's a sign of a negative divergence in the stock market. I take that as another evidence that we're actually headed for a correction, a drop of some sorts. I have no way to predict the magnitude, but corrections even within a bull market of 15% are nothing out of the ordinary. If you have some bad event, you can go down 20 or 30% even. Who knows? You can't predict the future. But what you got to do is be aware of what the underlying trends are, be positioned accordingly. And as you saw, the trend for gold is up. We cleared 1350, that key resistance level. The gold stocks are lagging. But how can we trade the stock market and make money in an environment where at the moment things are sort of sluggish? We're not in a position like we were in December when the Dow went up crazy, like 10% in just a couple weeks at all. Things are sluggish. Some stocks are languishing. Leadership is narrowing. In one sector, the gold has come alive. Well, the critical bank sector is dying. It's dying. What can we do? Clear our minds and think, what's a strategy designed for a stock market situation where, not much is really going on at the moment? And that's why I've been selling options. So trade momentum, that's what everyone wants to do. Chase stocks, chase gold stocks. Don't buy bank stocks right now. Be very cautious on the stock market. We've got a yellow light on the stock market. We got a green light on gold. How do we make money when we got a yellow light in the financial market? So in the stock market, in the Dow and the S&P 500. That's why I've been selling options. And I've been doing this in the private power investor group now since May, June, July. That's 5 reports, right? I put out every single trade in the reports has been a winner. And that's powerful because this is a trading system where I just sell options on stocks I don't own, and then the hedged option I sell with another one that limits any potential losses. And ever emphasize that word 3 times: selling naked options, whether they're puts or calls. That's probably the most dangerous thing anyone can do, is to sell a naked option. I always hedge, so my options are naked. And when you sell an option, I did one right here on Goldman Sachs because I've watched these bank stocks very closely, and I just, I'm looking at what's going on, and I sold an option on Goldman Sachs on August the 16th with a strike price of 240 that expires on September the 15th. That's next Friday. This is a trade I got going on right now in my account. This is real. Now, how this trade works is very simple. I sold a call option with a strike price of 240 that expires on September the 15th. Of course, it seems very unlikely that Goldman Sachs is going to shoot up to 240. I like to sell options on stocks that chance to fall anyway. I don't look to sell options on stocks that are in a strong rally when I'm doing these call option trades like this. And I put these two blue lines on there to show you the top horizontal line is the 240 level. The vertical blue line is September the 15th. So that's the box this stock had to stay in for my trade to be 100% winner. And that's where I think I'm headed for. You can watch us every day to see if I'm going to be a winner or a loser on it. But over 90% of options expire worthless. And when you do options on stocks that are going sideways or down anyway, and you're selling calls to people, it's that percentage is going to be over 90%. And it's just a simple way to make money. Doesn't require any big investment at all. And you just sell the option. Expiration date comes, the position's gone, and that cash is in your account. And if the stock went up, well, I could get out of the trade at any moment if I got nervous about it, and there's a time decay factor. So if I just literally got in and then got out 3 weeks later, I would probably make money anyway. But I want to make, the complete amount of money I can. So I'm just gonna, sit on this and wait for it to expire next month. And these are the type of trades that are really easy to do because you just enter them one time and you don't have to think about when am I going to get out of it. You get out when it expires. The trade does its own work. The amount of money you're risking is clearly defined when you hedge the position because the hedge will go up if somehow Goldman Sachs got bought out and opened up at 270 or something crazy. But the odds of that happening are really, kind of silly. But you got to think about the theoretical possibility. Just very conservatively, because think about what is that worst case scenario, and that's why naked call selling or put selling, which I see some people advocate, is deadly. It can be very, very dangerous because say you did that 100 times, that one time comes where there's some crazy situation and you can be smashed and set back in your account like you would not believe. But when you do conserve, it's like I think the riskiest type of trading you can completely do. But when you do things conservatively, which you can do with options, you can do whatever you want with options. You can be as risky as you want to be or as conservative as you want to be. And my goal is just to make some income on trades like this. It's just make a little bit of income. Stock market's just like, the mania that was there in December to March with the Dow and really till July and with the NASDAQ. It's that momentum mania is only in a couple stocks, not in the Dow really anymore. And even if the Dow did go up, it's not going to go up, 10% in 3 weeks or 4 weeks. And so you could pick out stocks like Goldman Sachs, that just are kind of weaker anyway. And the whole bank sector is weaker than the market. And there's stocks out there that are even worse, that are scams, that are bubble stocks, that are rolling over already, that are just dumping and just like it's. You look for the crap stocks, you sell an option in it, you move on. And if you want to get involved with this with me, because I'm going to be putting out a lot of trading reports like this, and this is a brand new service I started for the Power Investor Group. Go to optionsincomegenerator.com or click below this video. There's a link. Will take you there, and you'll get all my future options reports. Each one I've done since May has been a winner. Of course, past results don't predict the future, but that certainly makes me feel good. It should be encouraging to you. And in this type of market environment, it's just grab income. It doesn't cost. You don't have to put lots of money down. You don't have to put $30,000 in a stock. You just grab the income by selling a call option to someone out there who wants to make a crazy bet that Goldman Sachs is somehow going to go above 240. When I did that last month, and it's really done. Whoever I sold that to, they're sitting on that right now, and it sure don't look like it's going to 240. So what am I going to do when that trade is complete and expires? I will then look to sell another option to someone else, not in that stock. It could be a different stock because I look at the situations these stocks are in. I'll be looking for a different one. I look into the premium that's being that's for volatility on these stocks. There's all kinds of different factors. Of course, in this case, I also looked at the sector. There may be another sector that's in a better position in a week from now or 2 weeks from now and so forth. This isn't all I'm doing with my money, of course. I've got core positions in gold and silver and mining stocks, and I've got a report inside the Power Investor member section for the 15 top gold stocks that I own right now that I think are the best ones to own. They all pay dividends, and it's been a fun time to be in them. And I think it's going to continue to be going into the end of the year and beyond. But this is what you get with an options income generator. It's a course, of course, that's fairly short, explaining in more detail with more examples how my option selling strategy works. But more importantly, it's a combo offer because you're getting these options trading reports as a service. It's a trial with the Power Investor flagship service. That's my premium membership service. We're putting them both in a combo deal. I've never offered a combo deal like this. If you are on other websites, say you just go into thestreet.com as one example, people tend to sell everything they got separately, and for each one of these services would be $1,000 to $2,000 anywhere else. And they'd sell it all separately. They'd sell the course for thousands of dollars too. No, I'm not doing that. I got it all in one simple package. Why do I do it that way? Because these things are good reports, and they help people. And I don't feel like I've got to make all this money up front, like crazy and be real greedy. Instead, I think if I can get the information out to people at a decent price and they see it works for them, they'll stay and keep getting value out of it, make money, and do this stuff together in the group and with me and moving forward in these markets. And this is a very interesting time in the financial markets. I mean, I know today not much really happened. The S&P is up or down or whatever, barely changed. The Dow's only down 20, but gold stocks soared. And the Dow bounced off the 52 moving average again. Is it going to keep bouncing off that and then just go crazy and go up, or is it going to go through that before this month is over? And I think the latter is the case because we see these bank stocks weakening. But regardless, it doesn't matter. If even with the bull case scenario, there's still lots of opportunities to sell options to people on stocks that are weak anyway. And as I've been saying, I've been doing this since May, during months in which the stock market went up too. And it's a good strategy because I'm not trying to gain the market averages, really. I'm gaming the sectors and the stocks that, for that moment, are weaker than the market averages. So I'm kind of like liberated from worrying about, with this strategy, what's the stock market going to do? Is it going to go green on the close? All this kind of business. It doesn't really matter. I'm looking to make income instead of putting all my money in, the bank stocks or these stocks or this stock and hoping they don't fall just so I can get dividends. I'm not doing that. I'm just taking money straight out of the options market to get that income in my account as base income. So that's how this works. And we just launched these reports Monday in this combo package to get them out there, to get things rolling, and take advantage of it. Click below the video, get into it, and I'll be talking with you later.